Welcome back. Today we're looking at a high-growth thesis on Applied Digital, or APLD.
Right, and their Q1 2026 earnings were huge. Revenue exploded, up 84% year over year.
It's a massive validation of the hypergrowth story. But to really maximize investor confidence, there are a few areas we think could be tightened up.
Let's jump right in.
Okay, first, the core issue seems to be managing the optics of that growth, specifically around the net loss. You correctly flag the nearly $28 million net loss, but the material dismisses it as solely due to growth capex. And I just have to ask, is that quick dismissal really enough?
I don't think it is. And that's the weakness. You're relying on a simple explanation and just assuming the reader is going to accept it without question.
Which a skeptical investor probably won't do.
Exactly. The suggestion is to analyze that spending robustly. You have to demonstrate that it's strategic and, temporary.
So how do we show mathematically that this is a defensive spend and not just a aspirational cash burn?
You go directly to the numbers. Analyze that $26.3 million in revenue from tenant fit-out services.
Okay.
Show how that specific revenue stream is stabilizing the cost structure right now before the massive operating leverage from new sites even kicks in.
That gives concrete proof that the loss is a temporary and necessary cost to unlock that, $11 billion backlog?
That's it. It's an investment, not a flaw.
All right, let's move on to how APLD is being framed. Your description of them as a generic landlord for the AI revolution, it needs to be sharper.
It's an accurate description, I think we both agreed, but...
It is, but it's getting really common. Are we obscuring their actual competitive edge with that broad label?
I think we are. The weakness is relying on this description, which, frankly, doesn't leverage the very specific contractual advantages that you outline later in the piece.
So the suggestion is to sharpen that angle.
Yes. Highlight the unique risk mitigation built into their contracts. That's what makes them different.
We need a killer piece of evidence for that. What's the one thing that separates them from the rest of the field?
Focus on the 15-year lease with CoreWeave, the one for the 400-megawatt Polaris Forge 1 campus.
That is an incredibly long term.
It is. So explicitly contrast that against typical, shorter industry agreements. That analysis shows exactly why APLD's revenue is so uniquely sticky and de-risked. It moves them way beyond being just another data center landlord.
Okay, finally, let's talk about the capital structure. The connection between the backlog and the financing. We see the huge $11 billion backlog, and then, separately, we see the big financing package, the senior notes, the Macquarie equity. They're presented almost as two wonderful but separate facts.
And the weakness there is just assuming the link between the capital and the execution is obvious to the reader.
You're making them do the work.
You are. So the suggestion is to create an explicit section that bridges those 2 points. You have to demonstrate that the November 2025 financing was the essential de-risking event. That's what made the backlog real.
Right. We need to literally show how the money translates directly into executable megawatt capacity.
Absolutely. Connect the funding right to the execution timeline. State that this capital is what enables the rapid development of, say, the 300-plus megawatt Polaris Forge 2 campus.
Which then funds the infrastructure needed for that 200-megawatt contract with the major U.S. hyperscaler.
Yes, you show the reader exactly how the money fuels the growth explosion. It's a direct line.
This is great. So to recap, maximizing the impact here really requires dialing in these 3 areas. First, fully contextualize that net loss by tying it to the stabilizing fit-out revenue.
Second, sharpen the AI landlord differentiator. Use those specific long-term contracts as your proof.
And third, make that financial bridge explicit. Don't just list the backlog and the funding.
Show the execution timeline that the capital injection enables. If you implement these suggestions, you basically eliminate the biggest counter-arguments a sophisticated reader might have.
We invite you to submit your revised work back in again for a follow-up critique.